Welcome, everyone, to Vested Interest. This is Shane back for the portfolio update, weekly update. We do this every Sunday morning at 7:30. We are going to cover the $1,708 that we added to the portfolio, any dividends paid out, any options that we were in this week. But before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. And for those of you who may be stopping by for the first time, on this channel, we focus on dividend growth investing, buying stocks in good companies that pay growing dividends, hold for the long term. It's not rocket science, in my opinion. The best way to do anything, just keep it as simple as possible. So it really boils down to consistently investing, dollar cost averaging, whether that's weekly, monthly, annually. This time of the year, a lot of people get tax returns back, so maybe you invest that once a year. Whatever it is, it's free to see what I'm doing in my portfolio on this channel. So you can see actively, for those of you who have not started a portfolio, maybe this will give you some confidence that, someone, average person like you, because that's what I am. I'm just an average person who goes to work every day. I've got 2 kids. I'm married. And I just consistently do this so that you can see a real portfolio. I'm not a guru. I did not go to college for finance, and my parents were not wealthy. They're pretty poor and still live in the same double wide trailer that I grew up in. So if I can do it, you can do it. And again, that's what this channel is about. So you can see that built out over time, a real portfolio. We all have enough to pay for, so it's free to see what I'm doing in my portfolio. The only thing I would ask, if you would, hit that thumbs up button if you find any value in the content. Subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community and ring that notification bell so that you are notified whenever we put out any new content. Doing that really does help a small YouTube like mine with the YouTube algorithm. And I'm trying to get to 1,000 subscribers. So doing that also helps me get to 1,000 subscribers. And the only way I grow is with your help. So now let's jump into the video. And we are going to start off with options. We did have a couple options contracts that we threw out that hit this week. Now, these are not the only ones that we threw out. These are just happened to be the ones that hit this week. So Bank of America, we've been running this play for a while. We had one, and let's just start here. We opened the contracts on Monday, February 26th. This one is for one contract, so that's 100 shares. We sold to open. I always sell contracts. I don't buy any options. I don't buy puts or buy calls. These were both cash secured puts. This one contract, and that's 100 shares. You have to have 100 shares or be willing to buy 100 shares for one contract. Bank of America, ticker BAC, again, put. That's a cash secured put. Bank of America with a date of March 1st, 2024. So this is when the contract expires. So open on Monday, expires on Friday. I'm running weekly contracts, and with a $33 strike price. So for that, we received 14 cents per share minus the 50-cent fee. What they charge is a 50 cents plus 5-cent fee. So you take that 14 times 100 would be $14 minus the 55 cents would be $13.45. So we received $13.45 as an options premium for the first one. The next one was on Pfizer, ticker PFE. Same thing, one contract, sold to open, cash secured put, same date, right? Expiration date, March 1st, strike price $27.50. And for that contract, we received $28.45. That's 29 cents per share minus the 50 cents fee that they charge and the 5 cent as part of that fee as well. So 55 cents total they charge me for running these contracts. $28.45 goes back into my portfolio. So all total, $41.90 in options premium. This goes right back in, and I just invest this back into the portfolio. The reason I am running options on my portfolio or portions of my portfolio, not the entire thing, is to generate more income to invest back into the portfolio and hopefully grow the portfolio faster over time. Now that we've covered options, we're into the first dividends and the only dividends received. A couple companies paid us on March 1st. We received all total $134.18 in dividends. The companies that paid us, ticker KR, this is the Kroger company, paid us $29. We have the DRIP set, so that means DRIP stands for Dividend Reinvestment Plan. That just means whenever a company pays out dividends, like Kroger in this example, they go right back in and buy more shares of that company at whatever the strike price is. So in this case, $49.59 per share. So that picked up 0.58468 shares of Kroger. Kroger is out of the consumer staple sector. And Pfizer, not only are we running some options plays on Pfizer, this one also paid out dividends. So we actually added to this. You'll see here in a minute. Pfizer did get quite a bit of an attention in the portfolio this week. Ticker PFE, this out of the healthcare sector, they paid out $105.18 in dividends. Those funds went right back in and picked up 3.9439 more shares of Pfizer. So that $134.18 in dividends bought these additional shares, which added $7.27 in passive income. So that's that dividend snowball in effect. I've already bought shares of Kroger and Pfizer. Those shares in the portfolio paid out dividends. Those dividends buy more shares. Those shares add more capital. That is the dividend snowball in effect. Now on to the first new capital added to the portfolio. On February 28th, we added $971.53. And with those funds, we picked up 5 shares of Comcast Corp, ticker CMCSA. This is out of the communication sector. We picked up those shares at $42.31. And we've been and this one we've been adding to for a while, a few weeks now. We're going to build this out to 100 shares. So you'll see this probably at least through March and maybe into April. Depending, it's starting to run up a little bit. I don't want to get too ahead of myself. If this gets into the $44, $45 range, I'll probably back off. But for now, we're going to try to get to 100 shares before it gets there. We'll see how that goes. We've been adding to our Alibaba position as well, ticker BABA. This is a Chinese company out of the consumer discretionary sector, so completely understand if you're avoiding, foreign companies. That's nothing wrong with that. That's just not what I'm doing. So everyone has different investing strategies. Mine includes stocks from other countries, just the way it is. And these 10 shares we picked up at $76. We actually could have got these cheaper throughout the week. Started out the week at 77, dropped back to 76. I think at one point it maybe even dropped back into 73. I think it ended the week somewhere around $74. So I'm hoping that it stays under 76 next week and we can get some cheaper shares. I was getting these about a month back, about $68 per share. So this was another one that's kind of run up here. We're almost to 100 shares of this one. Should be over the next couple weeks. We'll get there. So I want the price to stay down in the 76 or lower range. Now, these 10 shares of BABA plus the 5 shares of Comcast added an additional $16.12 in capital that would be dividends over the next calendar year. And last but certainly not least, on March, first day of March, on Friday, we added $737.09 more in new capital to the portfolio. And with those funds, we added to our Cisco position, ticker CSCO. This is out of the information technology sector. Picked up 2 shares at $47.94. Added some more to Pfizer. It's just really fallen down to what I consider pretty cheap. Same thing with Cisco. So I added 4 more shares. We had options play on this one. That's part of this funds that we added here. And then we added some new capital as well. 4 more shares of Pfizer, ticker PFE, out of the healthcare sector. Picked up those shares at $26.67. 4 shares to our Realty Income position, another existing position here, ticker O, the monthly paying REIT. Really dropped down. I got a deal on this one, $51.06 per share. I think it closed out the day on Friday at $52 and some change. So was glad I bought it when I did. And that's the thing. Whenever you're buying consistently every week, sometimes you're going to pay a little bit more than others. Sometimes you're going to pay a little bit less. It's just the way it goes with dollar cost averaging. The idea is to over time be pretty median price range. Realty Income is just 51. Anything under 52 I'm going to be buying, and really right now anything under about $56, $57 I'll probably continue to nibble at here. So 4 more shares there, and these are our 2 weekly ETF purchases that we're going to make. And this is something that could be an easy thing to follow for those of you out there who are just looking for an easy hands-off approach to investing. If you added just 1 share of SCHD or 1 share of VTI or 1 share of VOO or 1 share of SPY every single week or month or quarterly or once a year, whenever you could afford it, over your lifetime, I guarantee you would hit millionaire status after 30, 35 years of your working life. But we added 1 more share of the Schwab ETF here. This is a dividend growth ETF, ticker SCHD at $77.56, and 1 more share to our Vanguard Total Stock Market ETF, ticker VTI, and that's what this is. It's just all of the stocks in the United States stock market. So $252.71 per share on that one. All total, the $737.09, and the new shares we picked up with those funds added an additional $29.19 in dividends over the next calendar year. Total invested $1,708.62. Total passive income added with the dividends paid out and with the new positions bought, we added $52.58 in passive income over the next calendar year. Quick run through the sector allocations here. This is the overall portfolio and how it's broken down. Communications makes up 9.13% of the portfolio. Consumer discretionary at 4.54%. Consumer staples sitting at 11.56%. This one I am seriously considering about selling out of my Kraft Heinz position and rolling those funds into General Mills. Kraft Heinz just has not started increasing their dividend like I thought they would. General Mills has a very nice, very similar company as far as brand recognition, but I think it has a little better metrics. So I'm seriously considering selling out of my Kraft Heinz position in my consumer staples sector here and rolling that into another company in the same sector, consumer staples, just General Mills instead. It's having nice dividend growth as well as capital appreciation. Right now, General Mills is pulled back. It is very interesting. It is on my watch list. So this may see some changes over the next week or two. Energy sitting at 6.22% of the portfolio. Enbridge is one I'm looking to add here, probably over the next couple of weeks. Financial sitting at 8.24%. Healthcare sitting at 16.37%. You saw the Pfizer position that we added to that we were running dividends on. Johnson & Johnson has started to bounce back a bit, so I like to see that. Industrial sitting at 7.71% of the portfolio. Technology at 7.42%. Cisco, if it remains under my cost basis, right now my cost basis is around $49. So if it was to stay 48, 47, 46 in there or lower, I will probably continue to add to that position too. Materials sitting at 11.77, utilities at 4.22. I am looking to add over the next month a utility company. So if you've not checked out the four stocks I'm looking to add in March, go ahead and check out that video and you can see which one. REITs and real estate sitting at 11.46. Again, so long as realty income stays low under my cost basis I think is around $58 per share. I'd like to get it under $54 per share. It's down in the 51, 52, 53 range. So as long as it stays down there, I'm going to add to that position as well. And ETFs at 1.39% of the portfolio still remains the smallest slice of the pie. Now, what a lot of you come to check out every week, which again, that's part of the reason I do this. I want you to be able to see a real portfolio built out over time. Nothing, no paywalls to go to, no Patreon to go visit, nothing to buy from me. I'm not trying to sell you anything. I'm just showing you what I'm doing every week to build out a real portfolio. So hopefully this encourages some of you out there who may be worried about it, that yes, you can build it out, and it doesn't have to have 30 positions like mine does. It could be 1 or 2 ETFs. You could pick 4 or 5 companies that you like really, or you could invest in index funds. It's really up to you, your investing strategy and style, but this is what you could do on your own. You don't have to have a financial advisor. You can be your own financial advisor, do your own investing, and if you're paying for investing, find another brokerage. You should not be paying any fees for investing. There are so many free investing brokerages out there now where you don't pay to buy stocks anymore, that you can do it yourself. So if you have a financial advisor, see what you're paying them in fees, and you could be rolling that into your portfolio and being your own paid advisor, right? But anyways, here's the ticker, how many total shares I have of each company, current price as of the close of business on Friday, the market value, average cost per share, that's my average price per share, my purchase price, so how much in funds I have in the position, total return, whether I'm up or down. And I'm going to show you if I'm up, if I'm down, you're going to see it. Here, the percent return, where the company sector, quarterly, monthly, semi-annual dividend payer, what the current yield is as of the close of business on Friday, yield on cost, portfolio weighting. We saw in the previous slide the sector weightings. This is by each individual position, estimated annual income here, payout months here, dividend growth here, and this is part of the reason I'm looking at, let's look at Kraft Heinz. I'm looking at some of these companies that are now zero. They're not raising their dividend. I don't like to see that. I've had Kraft Heinz in my portfolio for a couple years now. They have not raised the dividend. So I've given them time to fix that. They have not. I like the yield, but I don't like that I'm down a little bit, close enough to break even. I'd take the 278 loss, roll it into General Mills, and at least see, I think General Mills right now has dividend growth of about 9%. So I'd at least see some dividend growth year over year with that move. I've just got too many now that are not paying any dividends. Union Pacific, another one that I'm really disappointed. They've stopped growing their dividends over the last year and a half. So zero there. So some of these positions, if they don't start picking back up their dividend growth in the next year, 6 months, year and a half, I'm going to start looking at other places to park my money. Union Pacific, I could roll these funds into General Parts Company, GPC, for example. So I may even look at doing that, right? We'll see. I am going to make some tweaks to the portfolio. Kraft Heinz is the one that I've got my eye on right now. 15% of its 52-week low here. So I work out the math, figure out where a company is at 15% of its 52-week low. Let's talk through that with BABA, right? I'm trying to get to 100 shares or over 100 shares. My cost basis is $73.43. As you saw this week, I bought it at $76. 15% of its 52-week low is $76.62. I am trying to keep my average cost per share under $76.62. Right? So if this does run back up, BABA, let's say it hits 77 or 78, I would keep buying until I got to 100 shares, as long as it kept my cost basis under 15% of its 52-week low. So that's why I'm trying to keep buying down here in the 73, 74, right? It closed out the week at 74.63. Wish I'd have waited to buy it, but you never know what it's going to do. It could have jumped up to 78. So, but that explains, or is trying to explain what I do with this 15% of its 52-week low. Total shares, I have 6,091.1 shares. Portfolio is currently worth $215,702.48. I have $210,383.27 into the portfolio. I am up $5,315.21, or 2.53%, but I don't really focus on this. I'm more, right? See the big red circle? Current yield is sitting at 4.506. My yield on cost, 4.62. And this is what I'm focused on, whether the market's up, whether the market's floating sideways, or whether the market is down. The dividend income paid from all the positions in the portfolio continues to go up week after week, month after month, quarter after quarter, year after year, and currently sits at $9,719.80. So by the end of March, I think this is going to go from 4 figures paid out in dividends to 5 figures paid out in dividends. So I'll bust over that 10,000 per year estimated annual dividend income, I think, by the end of March. Dividend growth is sitting at 4.65%. So overall, this right here, along with companies increasing their dividend, along with me paying into and buying more positions, should grow by companies increasing their dividends at 4.65%. At least that's the average now. And bringing this up is part of the reason I'm looking at dropping some of these positions that are paying 0% dividend growth, right? I don't want dividends not to be growing over time. I want the dividend growth along with capital appreciation, along with me buying more shares. I want to increase that compounding impact the more that I can. So Kraft Heinz is one that's on the chopping block. Union Pacific just really over the last year stopped increasing its dividends. So I will give this one a little bit of time to start going again. Some of these others, AT&T, I knew that going in, so I'm not as concerned with this one. I figured I would give this one, 3 to 4 years to get back on track anyway. I bought this one as a turnaround play because of the high dividend yield, and I just thought, I still think it's pretty cheap. If it drops below my cost basis, another one that I'll probably nibble on. Verizon, I don't mind slow growth, right? Very nice high dividend yield. I am down slightly, so if this was to drop under 4 or 5% back in the 38, 37 range, I probably would add to that one as well, because I really like this high dividend yield with paired with, even though it's slow growth, it's still growing, right? Just about even with average inflation, 1.93%. Some other ones, Enbridge, like I said, down 7%. This is another one I'm looking to add to. Cisco added a little bit this week. Would love to build this one out, get this to like $400 in estimated annual dividend income, right? So long as it stays under my cost basis, $49.64, so it's $48.38. I'd love it to drop down to $48, $46, $44, and bring this cost basis down. But those are some positions in the portfolio I'm looking to add over the next calendar year. We're going to keep, or next month here, BABA, want to get to 100 shares, Comcast, and then any of the positions in the red, I look at opportunities, positions to add to. Well, that is really it. I'll stop rambling away. Hopefully, you enjoyed the content. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to freedom, financial freedom. Join us in the vested interest community. And hit that notification bell as well. I do drop a comment down below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great weekend, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek legal advice counsel or a certified financial advisor.